Today is July 26th. I just took a trade on NQ on the short side. The reason is that right here on the plus supply and demand side, it has S5. That means retested almost fifth time. You can see on the liquidity side, the liquidity price went back to the liquidity. It went very close multiple times, but still could not break it through. Same thing happened a little bit differently on the ESI. Price went up, took the liquidity, swept the liquidity completely, and then it could not go further up. So that's why I thought my belief is price action is on the downside. There's a lot of resistance on the top, and then liquidity is getting stronger. Price could not even break it through on NQ. Even though it broke it through, it just took the liquidity on the ES side. Market might reverse. So my goal is to make sure I have my stop on the right side of the above the couple of ticks above the supply zone. Price may go back here, retest maybe one more time, or because it retested twice in the same level, it went back a little bit up and then come down. So let's see in terms of if the prices break the barrier on here on the liquidity, break the barrier again on the ES side, then it's a long trade until it is not broken on the liquidity side, the seller's liquidity on the price above, and also the supply demand system. Still it's a short trade. So let's wait and see how it plays out. Again, we have this room. This is what I'm worried about, because the prices may go close to that level to touch and or sweep the liquidity. If it is there, that means my stop is wrong. This is what, that 93 300. I'm at 93.89. So let me see. Almost going to the liquidity side. Just want to turn on the chart trader there. Okay. You know what? I'm going to move it above the liquidity. If it touches. But I want to make sure if it is touch, if you see a reverse, I don't want to get stopped out. I know it's I'm increasing the risk, but this is the mistake happened on the entry, because entry has to be closer to the stop, where the stop should go. Because if you're taking the trade entry anytime, then you cannot put the stop based on I only want risk like $200, $300. Then if you have fixed a stop, then the chances are you're going to get stopped. So again, the stop needs to go where the stop needs to go. In this case, behind the liquidity and behind the supply. So I had it behind the supply. My thing is, I think it almost twice it went to the edge and then coming back into the, even now went to the edge and coming back. So that's why I want to make sure this time I want to keep my stop above the liquidity level, above this liquidity level, current liquidity level. We can see the red liquidity level right there. So that means the price, even it goes there, it may touch and then bounce it back. The good sign, in the ES side, I see the liquidity forming again. Even though it swept it last time, forming again. Maybe the liquidity will go back again, take it again. We'll see how it turns out. But as far as we can, price is struggling to pass this line, pass this line, that means somewhere we need to take the short trade. Closer to the liquidity is far more safer, but at the same time I don't want to miss the trade, so I took it a little bit early instead of being patient. So what's the punishment? I had to take a bigger risk. I am taking a bigger risk. That means a lot of stop loss. I had to make sure my stop is in a safer place. When you say safer place, what do I mean by that? It has to be in this place because the prices go up. It breaks the liquidity completely. That means it's the direction is wrong. Buyers have more power to continue upside because it was trending up. I'm taking against the trend, just for based on the supply and demand and then liquidity. I believe in the system. That's why I took the trade, even though it's against the trend. I would not advise anybody who is starting out that trading, do not take any trade against the trend. That will backfire you. But in this case, I know I have been seen so many times how the price reacts to the liquidity zones and then supply demand. If it struggles this much, that means it's not having enough steam or power to get it through. That's why I think I'm going to keep it here for now and see what happens. It's a patience game, guys. Patience. Just be patient. I had a lot of risk right here because I want to see one more swing so that I can move the stop down. Until I don't see one more swing, creating one more lower swing, lower low, my stop has to go there for sure. Again, behind the liquidity, hide your stop behind the liquidity. That was my point. So always try to take the trade closer to where the stop should go. If not, don't take the trade. It's okay, don't take the trade. But if you take the fixed stop, then you're gonna get stopped out really fast. All right, let's see what's gonna happen. Little bit have a patience. Let the market play out what the market has, because here I see the support here for the price for ES. So that means I don't want it to bounce between these two lines back and forth. I want it to break on one side. Since I took a short trade, I wanted to break it out on the demand side. So let's see. Do you see that? That's why I didn't move my stop yet, because still it's gonna find its direction slowly. But here the reason it bounces because of the supply. Lot of liquidity on the buy side, on the ES side. When the price action moves on ES side one direction, same way the NQ also moves, because underlying securities on the both indexes are, so there's a lot of common securities between those things. For example, like Tesla, NQ, Nasdaq, and Apple, Facebook. Lot of stocks are in the common between those. That's all the what is fabulous 5 or top 7 tech stocks. That's why we need to make sure, let it play it out. I want to see one swing cross this price one more time. That will create a swing for me. Then I can move my stop here. So I just want to make sure it creates one more swing lower. I want to see a lower low. Until I see the lower low behind my entry, I'm still at risk. It's going up, guys, because there's a bias liquidity right here. You see that how much bias? There's a lot of buyers at this price, 55.17. So they have a lot of room to run as well. Let's be cautious. Stick to the ground, stick to your stop. Let it play it out. So if you think like the market at this point could reverse, what you could do is move the target on the break even. Move the target on the break even, because based on the volatility it can come back and hit the target. You are exiting the trade gracefully. Okay, so I do that when I think market is reversing sharp, it might get stopped out. Only at that time I do that, but in this case I'm gonna, until this high is not crossed, I'm fine. When it's crossed, then I'm in trouble. But I still see the liquidity is still there for sure. I hope it will reverse from there again one more time. So in ES side you can see it's forming a rectangle. What do I mean by that? So if you look at the market, it's a rectangle. That means it can break out on both sides, any of the side, whichever is weaker. Is the buyer getting weaker, or sellers are getting weaker? Because I can see the green supply is getting extended, price is pushed up. Same way the sellers liquidity on the top, price is pushed down from there. It's bouncing between those two areas. The consolidation area, this is what we call as consolidation zone. Anytime the consolidation zone forms, that means price could not find the direction. It's struggling to find its direction, because sellers and buyers are in equal ratio, equal proportion in the market, in the order flow. One side is going to break. Which side? We don't know yet. I'm really hoping it's on the downside, because we had a good run, right? So we had a very good run right here. We had a very good run. So hopefully it will turn a little bit down. Break it out on the lower side. Still there is no buyer's liquidity on the NQ below the price, but I see it on ES. Still it matters. It doesn't matter whether I don't have it in here. If I have it on the ES, still it's valid, because ES and NQ almost trace the prices, correlate the prices very, very closely. I think at some point it's going to go too close. The way I'm seeing the consolidation, market maker loves the liquidity. I expect the market to go very, very close or take the liquidity. I think they will take the liquidity. I think I need to have little bit of room as well now, because market makers can control the market when it is like a consolidation, because both buyers and sellers are equal at this point. That means they can nudge the order flow to get to the strong liquidities side. So let's see, there's ES liquidity right here, NQ liquidity is right here. We'll see how it plays out. Just 7. It's retested 7 times. This is getting stronger, but let's see. We never know. Anytime the price breaks out a stronger zone like this, then it's a powerful long. Powerful long. It's getting there. I think it's a good learning, even though we lose. I think this way I can show you why we took the trade based on the liquidity. Price went up, it slowed down a lot. Price went up, slowed down a lot. That means it gives all the checklist of reversal, but because even it's forming a distribution, everything. So even the market break it through again, the trend continues upside. Still, it's worth. We had all our checks, all our points check out on our short trade. It's a good learning for you guys to see it. We can't have every winning trade. As long as we are following our trading plan, our system exactly, that's all we can do. If something, if you didn't follow the trading plan, one thing I didn't follow the trading plan here is that I took the trade a little bit early instead of waiting till the pullback, because I could have taken anywhere somewhere close. I'm at additional risk because of premature trade entry. Alright, at this point I don't know, so I'm going to put my target right there. I wanted to exit this trade gracefully without losing it much. Okay, so that's why I move my target over there. So I decided to give up on this trade because even the buy side is getting stronger. Price is like could not find the direction. That means I have a lot of stops. I don't want to take the trade, so I'm going to exit the trade. I don't want to exit here. I don't want to get stopped there, so I moved my target at near the entry price so that I can exit the trade gracefully without losing. When I say gracefully, I don't want to lose anything. Just because it's choppiness, it most likely it's gonna come down here. That's why has a chance that I might reach my target. In this case, I'm trying to exit gracefully without losing anything. Okay, let's see. Okay, let's see. Come on, hit it. Take me out. Take me out on my target, not on the stop side. Come on. Don't get bored. Just be patient. Just be patient. My mindset right now, either I will close my trade here or close my trade here. I'm not going to close in between. Okay, either I'm completely wrong or I'm going to exit this trade safely. That's the only that's the mindset I have. I don't want to close in between and then force myself in a loss, because still it could be a short trade. That's why I need to keep the stop here no matter what. But since I took the trade very late, not close to my stop, I'm trying to exit here, and then I may re-enter again a little bit closer. Come on, take me out. Take me out. So if let's see what happens. Let's see what happens next. Come on, come on, come on, come on, come on. Exit me gracefully. Come on, come on, please. Get to it. Just get to it. This is frustrating, but stick to it, guys. Stick to it. Stick to it. I know, because the reason is that I think if you draw the line, it's sticking with this plan. That's what's reversing right there. So I wanted to come back here. Come on. Again, my mistake was I took the trade late. That means I had to place a stop in the stop where the stop should go. That means I had a lot of risk. So that's why I'm trying to close the trade gracefully, so that I can re-enter a little bit closer to the where the stop could go. But will I get the exit? Let's see. Let's wait and see. I don't know how long I've been recording. It's such a long. Thank you for your patience, guys. Thank you for the patience for watching. Come on. Push it down a little bit down. On the ES side, it's getting closer to the liquidity. Come on, come on, come on. See, I think it's going to come back one more time again, because I think you can see the pattern. Do you guys see the pattern? This is what it is. This is what's happening right now. it broke the liquidity again on the ES side. Do you see that? ES side liquidity was broken, so that means clearly it has all the chances of going long. It is going long. It is going long. This is going to go to this liquidity here, this liquidity here. It's a long trade, guys. It's a very good long trade. If could have taken from the on the bounce on the demand side. I know I'm not talking, but I'm just watching the charts, how it plays out. You see that it's crossed it, went above, close to the close to liquidity. That's why sometimes it's important to see which is safer, supply demand or liquidity. I just put that on the liquidity side. That's why your trade has to be closer to the place where you can place your stop. So decide where the stop is going to go, okay? And then decide where the stop is going to go, and then try to take it close, as much as close to that stop where it's supposed to go. That's how the every trade should be. It's not like you can enter the trade and try to find the stop. No, you got to find the stop and then try to find the entry. That is the much better way. Okay, so let's see how it plays out. Again, my mindset is what I'm waiting for. I could exit the trade any time because I know I'm in the wrong direction at this point, because I told you the rectangle broke on the top side, that means it's a long trade. On the ES side, that's why I know at this point it's a long trade. Probability is higher than the short, but either I want to be completely wrong, that means stop here, or I want to exit the trade gracefully. So I'm trying to find which way I can exit right now. Still give it a chance to exit gracefully, because the market volatility is move not in a straight line, so it's going to come down, take it out a little bit. So let's see, we can exit a little bit gracefully. Look at that. I'm greedy, guys. I'm greedy. I'm greedy. I'm greedy. I'm greedy. I'm greedy. I'm super greedy. I'm super greedy. I'm super greedy. Greediness is good. Greediness is good. Greediness is good. How the fortune changes. How the fortune changes. How the fortune changes. Goodness gracious. It's a matter of I'm sticking to my stop. It's just that's what made a difference today. Don't you guys think? Just the matter of winning and losing today was sticking to my stop, sticking to my liquidity zone. If you don't have the liquidity zone, then you would have lost money. I would have lost money. Now it's turning to be $1,000 trade, guys. It's turning to be $1,000 trade. It's $1,000 trade. It's $1,000 trade today. Just only because I stuck to my liquidity based stop. I know liquidity based stop is going to help me a lot. Okay, alright. Make the stop tighter. Make the stop tighter. Make the stop tighter. Oh my goodness. Look at this. How much struggle did past the liquidity. Can you see? Can you guys see it? In terms of, I'm okay to get stopped out now. It's going to reverse anytime. It's going to reverse anytime. So I'm okay to get stopped, guys. I'm okay to get stopped. Or I will take more money. Oh my God, what happened to the market? I need to check the news. Something happened in the news. Something really happened in the news. Alright, it's a $1,500 trade, guys. $1,500 trade. Why? I stuck to my stop, because the stop needs to go. Well, this is the best lesson I can give you. There is no, I can say 1,000 words, but action, the trade speaks volume.